Hi everybody. Today I'll be discussing on whether we should invest in Overseas Chinese Banking Corporation Limited, also best known as OCBC Bank. So let's get started. The things that I will be sharing today will be a brief description of OCBC company profile, some fundamental analysis that covers on quantitative and qualitative analysis, and also some technical analysis on OCBC. From there, I will then conclude on whether OCBC is worth investing. Who is OCBC? Most of us should already be aware of who is OCBC, but for those that don't know, OCBC is actually Singapore's longest established bank that was formed in 1932 from the merger of three local banks. It has since been listed on SGX as one of the largest listed company in Singapore by market capitalization. OCBC offers a comprehensive range of financial services, but I will only list a few of those services, which are deposit taking, personal loan, and investment banking. What is fundamental analysis? It's actually an attempt to discover the true value of a company by examining related economic and financial factors. In order for us to get a clearer understanding of fundamental analysis, it is broken down into two factors: quantitative analysis and qualitative analysis. I will first be going into quantitative analysis. Quantitative analysis requires numerical statistics in order to understand the financial status of a company. Financial statistics which are utilized in this analysis are revenue, cash flow statements, and other financial ratios. In order to get better results, it is better to compare OCBC with other companies based on the market capital. In this case, we are comparing OCBC to United Overseas Bank and DBS Group Holdings, as they have the closest market capital to OCBC. Firstly, we're going to look into cash flow balance. Cash flow is a key indicator of financial health. Hence, positive cash flow would only indicate a good financial health for the company. A profitable company might not be able to manage their cash flow, so cash flow is important for investors to see if the company is having trouble with cash. For OCBC, the cash flow has been continuously increasing over the past 5 years, despite a slight drop in 2009 to 2010. It indicates that the company is sound in terms of financial health. Therefore, it would protect the company from loan defaults or takeovers. Now I'll be talking on net profit margin. The higher the profit margin, the more net sales dollars are providing profit to the business, and the fewer net sales dollars are absorbed by expenses. Under OCBC, it shows a percentage of 41.8, which means that for every $1 net sales generates 42 cents of net operating profit. As you can see from the table, we are comparing against UOB and DBS. UOB has a higher profit margin, which means that it has better control over its costs. Next, we will be looking at the price-earning ratio of OCBC. A high PE ratio means that investors are willing to pay more to buy the shares of those companies which they think have a good prospects. When comparing the PE ratio of OCBC to its other competitors, UOB and DBS, you can see that OCBC has a higher PE ratio in 2013, which shows that investors are willing to buy OCBC shares more. This means that investors have more confidence in OCBC compared to its other competitors. As for earnings per share, it measures the net profit attributable to one share. It is considered to be an important variable when determining share price. A company with high earning per ratio means that it is capable of generating significant dividend for its investors. A higher earning per share would also be a better investment for investors. For one ordinary share in OCBC, an investor earns 78 cents. Therefore, OCBC has underperformed when compared to its other competitors UOB and DBS. Now, I will be sharing on debt ratio. It measures the extent of a company's leverage. From the table, it shows an upward trend for the past 5 years, which shows that OCBC has been gaining more leverage. This is not good for the company, as it means the company currently has more financial risks. Now I'll be looking at returns of equity. It shows the relationship between net profit and shareholder investments in the company. This means that it measures the amount of profit that a company can generate from a shareholder's investment. As you can see from the table, the return on equity was 11.5% in 2013 compared to the previous year. This is actually due to the core earnings per share, as it was 78 cents in 2013, but in 2012 the core earnings was actually higher. The company has done relatively well over the years and maintained a positive percentage. However, when compared to UOB, OCBC has underperformed, but it manages to do better than DBS. And lastly, returns of assets. It measures the company's success in using assets to earn profit. It gives an indicator as to how efficient the management is at using the asset to generate its earning. The company ROA has done relatively similar to DBS, but it has underperformed when compared to UOB. So, what did we learn from all this quantitative analysis? From the financials, we can know that it's actually sound to invest in OCBC. However, in my opinion, investors can make better investment decisions, as the competitor, which is UOB, seems to be doing financially better than OCBC. The next factor that we will be looking at is qualitative analysis. Therefore, a SWOT analysis is done for OCBC. So what is a SWOT analysis? It is actually to analyze the company's strength, weakness, opportunity, and the threats it may face. Firstly, we look at the strength of the company. From my research, OCBC has 3 strong factors, which is their management, their credit ratings, and their numerous financial products and services that it offers to the market. Management might be the most important aspects of the company. Therefore, it is important to analyze the past achievements and performance of the management to see if they can lead the company. OCBC Bank is led by reputable committee members. The Chief Executive Officer is Mr. Samuel Tian. He is an outstanding banker with over 30 years of working experience in the banking industry. Previously, he used to be the President and CEO of Bank of America. Mr. Tian has made many remarkable achievements in the banking industry, and this can be proven during his service at the Bank of America. OCBC is actually one of the banks that has the highest credit ratings in Singapore, with an AA1 rating from Moody's. It was also ranked by Bloomberg Market as the world's strongest bank in 2011 and 2012. OCBC Bank also offers a consumer a full array of financial products and services to more than 1.5 million OCBC customers with diverse needs. These include several segments such as bancassurance and home loan. In addition, they also provide other services ranging from financial transaction, deposits, and other varieties of option loans. Next, I would like to talk about the company's weakness. OCBC is the smallest bank in Singapore by global presence. This means that OCBC is not known to the world as the brand name is not present to most countries. Without having global presence, they might not be able to expand and get other opportunities that other banks may get. The third factor that I would like to talk about is opportunities for the company. OCBC could expand into emerging economies such as India through acquisitions. It will serve the bank as a high opportunity as there will be an increase of investment if it proves to be successful. Furthermore, the bank will not be too dependable on Singapore and Malaysia investments. There are also many opportunities for OCBC to invest in technology to meet the increasingly challenging demands on regulatory compliances and superior product to fast and convenient services of the private banking industries. This will improve the OCBC products and services to meet the consumer needs better. Lastly, threats towards the company. There are many types of threats that OCBC could face, and one of them is the ongoing uncertainty of the financial market in the world. They may never know what might hit the financial market or what event could occur in the future that may result the bank suffering. Furthermore, OCBC depends mostly on Singapore and Malaysia investment. If there was a slight or huge decrease of investment in Singapore or Malaysia, it would definitely impact the bank negatively in terms of their revenue. And lastly, all banks will not be able to prepare for any regulatory changes across the world, and this also includes OCBC. If regulatory changes occur, it could be something that might not benefit the bank and cause the bank to lose an opportunity, or worse, a lot of investments and losses. Next, I'll be briefly going through the technical analysis. Technical analysis is mostly analyzing the graph by using indicators such as RSI, MACD, and Bollinger Band. As you can see from the graph, I have used two types of indicators such as Relative Strength Index and MACD. Both indicators actually complement one another. RSI is a leading indicator which is used to predict a stock price movement before it happens. As you can see here, the RSI is too high, which indicates an overbought. In this situation, the price of the stock is bound to retreat and stabilize in the near future. Furthermore, the MACD is also showing signs of dropping. From this, you can actually see that OCBC is underperforming as it is below the STI benchmark. However, from what I have mentioned using the indicators, it is showing signs of rising slowly throughout the year. So, what is the conclusion? Should we or should we not invest? I believe that investors should invest in OCBC, but they should be aware that they might only get a minimal return. This is because the stock is moving up very slowly and indicates a lower risk. It would seem to be more suitable for investors that are looking to hold the stocks for a longer period of time. However, for investors that are looking for higher return at a faster pace, this might not be a suitable stock for them. Now we have come to the end of this presentation and video. I hope I did not bore you too much and you have learned something from this video. So thank you. Bye.